Every single one of you wants to know the answer to one question. What will happen to property prices next year? In this video, I'm going to go through the latest report, the boom and bust report from SQM Research, the best property economists in Australia, bar none. We're going to go through every single capital city and give you an exact property price prediction for the next year. We're going to go through the rental markets in each state. We're going to go through vacancy rates, and we're going to go through why and what will change these property price predictions and what assumptions are being used behind the numbers. Hi, I'm Reedham Sayed, ex-Treasury economist and current founder of Alea Property and Flint Invest, where we help property investors get money, buy property, and grow and scale their property portfolios. Let's get into it. We're going to start by looking at the overall picture here. This is the capital city averages all across Australia, broken down by location. I'm going to put a little picture of this chart right in front of you so you have it. You can see my key takeouts here. Perth on fire, ripping year again. You've got 12 to 16% growth, driven by a lack of housing supply that we all know about. Perth is going to go bonanzas. Brisbane, bonanzas too, 10 to 15%. Darwin, bonanzas too, 12 to 16%. These three markets are going to go on a tear, just like they have been this year. And in this everything everywhere property boom, these markets are driving the national average up. We also have Melbourne, 4 to 7%. Sydney, the lowest performer here, 3 to 6%. The lowest performer is still doubling the inflation rate, tripling the inflation rate in some cases, depending on where inflation actually lands in 2026. House prices everywhere doing really well, when Sydney is the lowest performer at 3 to 6%. Adelaide, 10 to 14, another bonanza year. Hobart, 4 to 7. Hobart, very interesting. Hobart starting its next growth cycle by the looks of it here. Canberra, 3 to 6%. And here you have the national average, between 6 to 10% property price growth for the year ahead. That's another $1 trillion being added to wealth all across Australia, making Australians the richest people in the world. That is what this will do. Do you feel rich? I don't know about you, but a bunch of property investors out there, if you're watching this video and you own some housing just about anywhere, it could be a pretty bad investment, and you're probably still going to make a lot of money. If you own in many of these capital cities, if you own multiple property investments, then you are in for a bonanza over the next 12 months. And if you don't own housing, you might be watching this video and thinking, maybe I want a piece of this. Hopefully this guy is wrong. Hopefully SQM Research are wrong, because otherwise, if I'm going to buy, I'm going to end up paying more in future years because house prices are going up this year. And we already know this. When house prices go up, they barely ever come back down. Before we go into each capital city, I also want to go through what is happening in the rental market too. This wonderful report also gives us these beautiful price predictions for rent, which feed into the house price predictions as well. Now remember everyone, rents are the income that housing produces. When the income to the asset goes up, it's like a business that makes more profit. That means that business is more valuable. When rents go up, it makes that house more valuable. That's just some basic maths. So what we have here in rents is the capital city average for next year is sitting at 5.2%, with numbers significantly higher again in Perth, Brisbane, Darwin, Sydney, posting nearly 6% gains in rental prices. Hobart at 10%. Wow, 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 wow. That tells you a little bit about Hobart. Rents are going to go up 10% next year. That is so interesting when you're looking at it as a property investor, being like, my income's going to go up 10%. Hobart, one to watch here. You can see it in the data in this report right here. Adelaide, very interesting. Adelaide has the tightest housing market in Australia, up there with Perth, yet rents have stopped rising because people can't afford to pay more rent. Crazy scenario there. It's one of the first times in history where you've actually hit the affordability cap, where it's just like, hey, prices should keep rising because so many people want it, but they can't actually pay anymore, so prices cannot rise any further. This is a theoretical concept we talk about, but it's made real in Adelaide right now. Okay, let's start with Perth, the most interesting market of 2026. It's been so interesting over a number of years because Perth had a 1-year pause. It literally stopped for a year. House prices have been going woo for a long time, and then it just went woo sideways. for a whole year, and now it's on its next stage of liftoff. You know what I call this? It's like a second wind market. This is what happens when trillions of dollars of wealth just appear in a capital city that was never there before. People feel wealthier, and then house prices can take a little bit of a breather before shooting up again because there's so many upgraders happening there at the moment. People feel very, very confident, and the housing supply issues that drove that house price increase, they are still there. Check out this data. Check out these charts here. You've got the vacancy rate below 1% in Perth. That's why rental prices continue to go up. That's why house prices continue to go up. There are no homes available to rent. And gets worse. Check out the total listings available in Perth as well. It's this big downward steep curve where it's come back down again to really, really low levels. Some of the lowest levels on this chart. And this chart goes all the way back to 2010. That's crazy. I'm looking back 15 years ago, and there were more homes for sale in Perth then than there are today. That makes absolutely no sense. What are they doing there? They're not building enough either. Approvals are trending up, but they are not building enough right now to meet the demand, and that is why Perth property prices will continue to accelerate in the year ahead. You also have some really strong fundamentals too. So this is the economic story behind Perth. It is a strong one too. It is very, very strong. Perth house prices will be rising fairly strongly, even without this huge housing supply imbalance happening right now. It's got the engine room. It's pretty powerful right now. And you've got gross state product, you've got growth, 2.5%, beating the national average. You've got employment growth coming down, but across the country, employment growth is pretty weak. We are in an environment where unemployment levels are rising, so you've got weak employment growth. But Perth will still have employment growing next year. Unemployment rate consistently under 4%. Population growth rates 2.3%. That is so, so strong. You've got internal migration, you've got external migration, you've got migration happening there. So the population continues to go up at the same time as this housing shortage, driving that 15% plus house price increase into Perth. Now, if you've watched this channel, bar one video when you had the Trump craziness happening and you had to be a bit fearful, but you've watched this channel consistently over the last couple of years, you would have heard me talk about Perth having legs. It has legs to continue to rise, and that story is true. Rents are rising, housing market pressure exists, and there is the scope and opportunity for house prices to rise another 10, 20, 30% in Perth. I'd say it's somewhere around that 20% mark before you start getting into a more equilibrium price setting where prices are where they should be. Perth prices are still not where they should be. It still looks relatively cheap, even after doubling in the last 5 years. As crazy as that sounds. We are good at digging up the earth and getting some really important, really expensive stuff out of it. That is why we are the lucky country. It's not just the beautiful weather here and the wonderful people. It is what is inside that ground that's made us so, so, so wealthy. The wealthiest people in the whole entire world. That's how wealthy. It's the stuff in the ground. And guess what's in the ground in Perth? Good stuff. The stuff that we can sell everywhere around the world. It is an economy based in the mining sector. It does make up a larger share of their GDP versus other states, particularly here on the East Coast and in New South Wales and in Sydney in particular. But nonetheless, because they've made so much money from mining over the last few years, that's now expanding out with strong public sector investment into other things in the ground or up in the air or wherever we find liquefied natural gas to go and export to the world. So if you go back to March, some of it was a little bit scary because we didn't know what was going to happen to worldwide demand when we've got a crazy president being like, you get a tariff, you get a tariff, you get a tariff. Being like, hey, how are we going to predict the world? But now that it's settled down a little bit, the settling down is Australia is a big winner from all these changes because more and more countries are saying, hey, I can't buy from you over there. I need to buy more stuff from Australia. That is driving some of the growth, and Perth is a big, big beneficiary of it. This brings me to Brisbane, where the same underlying economic growth story holds. We are in the middle of a resource uplift, and Brisbane is doing fairly well out of that too. It is a function of the resource sector too. And when Brisbane does well, Perth does well, these two corresponding with each other makes some sense as well. So That's why you have Brisbane house prices going up to the moon as well, really, really strong. The difference between Brisbane and Perth, when I look at it, is Brisbane's long-term structure is quite certain with the Olympics going in there and a lot of diversification happening in that economy over time. And it's also on the East Coast, so it's more likely to get interstate migration from Sydney and Melbourneites moving up to Brisbane. Not a day goes by without somebody I know or some conversation that tells me, hey, I'm thinking about moving over to Brisbane, being like, maybe I can get cheaper housing. You might be about 5 years too late for that one. Sorry, Brisbane house prices are pretty expensive now, but they are thinking about doing it from this city because it is more expensive here than it is there, and the weather's better, and it's a great lifestyle too, and the economy is red hot too, not only right now, but over the next 5-10 years too. So the Brisbane house price growth story is set to continue. But here's the underlying message to Brisbane, and it's something I've been grappling with, and the audience knows this. I've been thinking about this, being like, can Brisbane house prices get to Sydney-esque levels? Can it get to so unaffordable that it's beyond ridiculous and looks like an outlier out here? Because here's the truth. When you look at all affordability metrics right now, Brisbane is sitting out here versus where it typically is. It's at 50-year sort of highs versus the typical Brisbane average. It is out there, it's wild. Yet this guy's saying house prices are gonna rise another 10 to 15%, and guess what? I agree with him. He's right. Brisbane house prices are going to do really well, so it's going to go out here to even out here. I don't even know if my hand's in the video anymore because that's what's happening to Brisbane house prices. They're just going off the charts. That is happening right now, and the Brisbane house price growth story will continue because you've got vacancy rates really low, a really strong economy, employment growth happening again, gross state product amongst the highest in the country, unemployment rates below average, a mining sector that's doing fairly well. You've got really strong migration levels, population growth levels. You've got everything that you need and a very, very tight housing market and a strong economy. And you've got the backdrop of a huge investment in infrastructure in the Olympic Games coming up too. That's why Brisbane house prices going to do very well in 2026. I agree with Louis. Perth, Brisbane, two of the hottest markets in 2026 and beyond. Well, number 3, the Darwin property market. And here's my prediction. I'm not so confident in this one. I'm really not sure between Darwin, Perth, Brisbane. I'm not sure. But I think I've got to stick to it because I've said it quite a few times now. And yes, I did say Darwin was going to absolutely shoot its lights out in 2025, and it has. And I do think it's going to shoot its lights out in 2026, but I think it might top the charts. In fact, on this very channel, I'm going to put it in here. Go watch this video 1 year ago. I went through the exact same report and went through what Louis Christopher got right and got wrong and said it was the best report, like I'm telling you right now. The best analysis, demand, supply, working it all out to work out what will happen to property prices. But go watch that video to see how it came out. I'm pretty sure in that video, I would have said, Darwin, he's completely undercooked. He's undercooked the investor herd because he's looking at the data itself, but I'm looking at the behavior, how people will respond, how people feel, the irrationality of property investors. That is what I was commenting on when I said that he got Darwin wrong, because he said Darwin house prices go up like 7%, and I think I said it's going to be like triple that, and it has been about triple that. A ridiculous sort of assumption to make a year ago. Today looks very, very common, very, very obvious. The reason for that is because property investors are making up a huge chunk of transaction volume in Darwin, and that is continuing. You also have some really good fundamentals as well. So obviously there's no homes available for sale at the moment. Listing levels are down. Common story that you're hearing from me throughout. Vacancy rates are pretty low, trending up a little bit, but still well below 1%. Basically, they're so low that there are no homes that are vacant. Rental prices are going up 10%. 10%. That is the key message with Darwin. Rental prices are going up 10% despite an investor herd coming in and adding in all these rental properties to the market. That means the underlying economy in Darwin is very strong. It is very, very strong right now. It's being picked up in the data too. If you look at GDP rates in the short term in Darwin, you can see a huge capex improvement, a very, very large increase in investment into one specific location driven by engineering projects for future natural gas projects. That is the pipeline of an increase in investment. You start doing engineering work behind the scenes for a big, big investment, and that is appearing in our GDP data, our national GDP data. A few projects in Darwin itself are picking up in the numbers, and you can see it here in the vacancy rate. Investors, I said it, you invest in Darwin a little bit like a low risk investment. House prices are at the same level as 15 years ago. This was last year's story. And you have the potential upside of a lotto ticket where it could absolutely go bonanzas. That bonanza lotto ticket, it's starting to look more and more realized where it's really, really attractive. And here's the thing, yields are starting to come down in Darwin, but that doesn't matter that much because yields are coming down everywhere. And Darwin still has better property yields than just about everywhere else in the country. So the relative affordability is really, really strong. And remember the backdrop of all of this. We are in a property investor boom at the moment. Property investor levels are back at their 2017 levels, making up 40% of the marketplace. Property investors, they care about putting money down somewhere. Now, if they care about yield, and Perth's yield's gone down, and Adelaide's yield's gone to the floor, and Brisbane yield's gone down, be like, when you're doing the math, be like, where do I go? Where do I go? Where do I go? Guess what trumps Darwin, despite yields coming down a little bit from that rapid price growth we've seen in 2025. I'm going to put a beautiful little table right here of the Darwin economy as well. It's pretty strong. You can get a sense of what is actually happening in Darwin from this table here. It's been shown throughout, but in Darwin in particular, you might want to pay attention to all these frameworks here. And what it tells you is a very positive story for where house prices could go in the next year. So I have a degree of confidence in this Darwin story that property prices will continue to rise in Darwin in 2026. Okay, let's keep going. You've got Melbourne. The Melbourne story has a weaker economy relative to other states, but a really, really positive story nonetheless because of relative affordability here. So the downside here is the largest contributor is government expenditure, which isn't so positive in an environment where governments are kind of tightening the belt up a little bit and trying to manage their budgets more and more in the years ahead. Nonetheless, you have property prices at their highest level of growth for a number of years in Melbourne. You're positioning yourself fairly early in the cycle. And I think Melbourne as a group should achieve house price growth something like this because supply levels are significantly higher. They will actually meet their housing targets or get close to it. And I just came back from there this weekend and I can see a lot of cranes up in the sky and buildings so tall that they get lost in the clouds and they're everywhere. Everywhere I looked, it's just like, whoa, that sort of housing supply story is why Melbourne house prices have sort of come down and they haven't failed like the rest of the country in providing homes, basic shelter for people to live. That's why house prices don't just continue to go up like madness there, they're going up at a sustainable rate. But for property investors, Melbourne is an incredibly attractive opportunity to invest in. But you have to be very selective about what you are investing in. We do a number of episodes. I'm currently planning for episodes about the best Melbourne suburbs. You can go through this channel and you'll get a sense of really, really great areas to invest. But I'm also talking about the worst Melbourne suburbs, and Melbourne suburbs that are really bad will go backwards. Melbourne opportunities that are bad will go backwards. So you have to be very, very careful in this market. I think you can find suburbs that will more than double this, potentially even triple this in some locations as well, which really positions you very, very well for a longer term cycle because of the underlying fundamentals in Melbourne over a 20 or 30 year period. I'm not talking about its economy today, I'm talking about its relative attractiveness on a global scale. That means it's very, very attractive for the long, long term and where it sits on the relative affordability frameworks right now. Melbourne is cheap. Melbourne is value right now. Those frameworks make it an interesting part to invest in, even if it doesn't rank up for the best in 2026. As a property investor, you're thinking beyond that. What's the best over the next 5-10 years? Melbourne becomes very, very attractive there as a destination to park your investment money. Adelaide's set to do very, very well in the time period ahead as well. You've got a really, really strong growth rate here. Adelaide is an interest rate sensitive economy too. So if you expect interest rates to come down, I'm not so sure about that, but if you do, then Adelaide growth story will increase even further beyond this. I think it's probably overcooked it a little bit. especially on the top end. I think it'll be pretty close. I do think Adelaide's going to get close to around that 10% number. I'm not sure it'll get to 14. Vacancy rate's very, very tight. But rents can't go up as much because it is so unaffordable at the moment. And that's why I don't think house prices can actually rise that much more. It's because it's so unaffordable. So 10% sounds about right for the year ahead. Its economy is weakening a little bit, much like the rest of Australia, but still very, very strong overall. And really the story with Adelaide is there's no homes for sale, they're not building enough, vacancy rates really, really low. The same story, big mess up from the government. We haven't provided enough housing shelter, so Adelaide house prices continue to rise. And I expect that to be the case as well. Here's a table of its economic performance for those that are interested. Next, you've got Sydney. Sydney posting another decent result. I've got 3 to 6% here. I think this is roughly right. Some really good opportunities in Sydney. The housing supply shortage isn't as strong in Sydney, but it is pretty bad with vacancy rates so low, sitting at some of the lowest levels in history in Sydney at the moment. So that part really bad. For renters, really ugly. But overall, not too bad. 3 to 6%. That's not a bad result for Sydney in the time period ahead. Economic performance here, you've got really strong fundamentals, long run, housing shortage with that vacancy rate happening at the moment, but employment growth fairly weak and GDP growth fairly weak. Again, interest rate sensitive. Without that interest rate cut story into 2026, which has changed over the last couple of months, I would say this is about right. I think Sydney will post a decent-ish year, just another year of modest growth. It shouldn't actually fly off the charts because interest rates are not coming down and it is an interest rate sensitive economy there. Okay, let me go through Hobart. Hobart rental prices up 10%. Hobart house prices up 4 to 7%. Hobart last few years has kind of sucked. Hobart should be on your list of areas to look at because it ticks those boxes. Hasn't grown very much in a number of years, rents rising really quickly, house prices only beginning to rise after a couple of years of poor performance, supply levels coming down ridiculously in vacancy rates, total listings starting to stop going up and starting to trend back down over the last few months as well. You have everything that you look for as a property investor to invest in a market early. You've also got a pretty strong-ish yield, stronger than Perth, stronger than Adelaide, stronger than Brisbane, not as strong as Darwin, but fairly strong yields. So Hobart should be on your list of areas to look at. And our team at Alaya have been looking in Tasmania and on the ground buying up properties. I've seen them in my inbox, couple stellar deals in Tasmania recently. So we're positioning our clients fairly early because of the long run economic cycle in some of these markets, not Hobart only, but other parts of Tasmania too. Launceston, Devonport, we've talked about that on our podcast. It's an attractive area for property investors, especially with lower budgets where you can't quite go to the 750 and you don't want a 4% yield or a 3.5% yield of a Melbourne house. Hobart attractive, Launceston attractive, Devonport attractive. Very strong reasons to position yourself early because you might be entering into a growth cycle for the period ahead and the underlying fundamentals tell you that you're going to get at least very strong rental growth and that should promote house price growth in the months ahead as well. I'm going to quickly skip over Canberra and go straight to Gold Coast because it's a very interesting marketplace as well. Gold Coast has dominated this year, up like 15% plus and up another 7 to 11% this year. What's driving the Gold Coast market? Part of it's the Olympics, huge infrastructure investment, one of the best places, not only in Australia, but in the entire world to go and live. Strong economic growth as well, population growth rates really high, underlying fundamentals very strong, good increase in the number of people wanting to live there. You have everything that you want when you're looking at a housing market and you have rents going up and house prices going up. I just spent a weekend in the Gold Coast as part of a very humbling experience where I won FBAA Broker of the Year at a Gold Coast event with my team at Flint Invest. If you're looking for a broker to help you manage your finances, not only to buy property with our team at Alaya, but also to structure your finances and give you clarity of what you should do next, the team at Flint Invest can help support you on your investing journey. Let me wrap it up here. This is quite a long video. We've gone through so many different markets, jigsawed around them. I've given you my thoughts as to why these markets are doing well, and Louis Christopher's produced some stunning research again here about what is happening in each state, and he was nearly spot on across every single capital city last year. And this same report, I think I'm going to look back on in a year's time and say, hey mate, you were right again in just about all of these markets. Compared to last year, there's less disagreement. I've got more agreement with him on most of these. If we have these base case assumptions where you just have some stability, interest rates kind of stay where they are, population growth continues the way it's going as planned, and things go without a big hiccup hitting us, some sort of big economic shock that we can't quite predict right now, then I think he's right. Perth, Brisbane, Adelaide, Darwin going to do well. Sydney and Melbourne on the rise again, starting to enter into their next growth cycles, but much, much more modest, especially at a group level when you think Sydney, when you think Melbourne, but lots and lots and lots of great opportunities to invest in both of those markets if you know what you're looking for. Hobart starting again, doing really, really well, something to look out for. There's a lot going on here, and our team at Adelaide and Flint Invest have given you so much information about these sort of areas, and we're about to release the best suburbs to invest in 2026. And we're going to cover the suburb level analysis of all of these cities that we've just gone through.